Mike Tedeschi, Wealth Management Advisor, Perspective Wealth Planning, with this week's market breakdown video. We're going to take a look at the four major U.S. indexes. We have a big development out of the Russell 2000. We'll dive right into that. We'll also take a look at the U.S. dollar as well as some commodities. And we're going to talk about market breadth and what has happened in the past when we have cycled from a risk-off to a risk-on behavior while markets are up near those highs and what that's meant historically for us. So let's jump right into it here. Here's the S&P 500. We've basically made a new all-time high for like 8 out of the last 10 days. Once we broke over that 45-40 zone right in here about a week and a half back, it has been a nice move higher. The Fed yesterday said that they were going to start tapering their bond purchases, and the market did not blink, continued to head higher, so that was a good sign. The Nasdaq, same type of action. It took a little bit longer for us to make that new high. As you can see here, we only have about 5 days above it, but a very clean pattern. Both the S&P 500 and the Nasdaq held the major support levels, so we had that breakout, back test, and then we've continued to head higher. These are solid technical setups, and they look fantastic. Jump in here and look at the Dow. Dow pulled up, made that new all-time high. Pulled back just slightly and then continued to head higher. That looks really good as well. And the Russell, this is what we have been waiting for. We have talked about this in just about every single video now for the last 8 months, how the Russell 2000 is trading inside this major long-term consolidation pattern after the incredible run-up we had at the end of last year. Digesting those gains and waiting for that next potential move. As we've said many, many times, if it made that breakout, that would be a very good sign because the Russell 2000 is more of that riskier area of the market, and when that is moving well, that shows a risk-on behavior for the overall market, and that tends to bode very well. If we made that breakdown, that would have been concerning. But here we are. We finally breached above that 2 days back. And we got that beautiful follow-through over the last couple of sessions and continue to rock and roll higher after the Fed as well. So it looks like we have that risk-on type of environment based on the action that we're seeing out of the Russell. Over 95% of indicators that we take a look at show a risk-on attitude through this week. And that is a big cycle change from where we were a couple of weeks back. Right, we talked about this in depth. We pulled right down on those indexes to a major support level, held that zone, and then made that beautiful bounce. Well, the investors in the market have continued to position themselves for higher prices and are now sitting up where almost all of the indicators are showing a risk-on behavior. When we see this type of move where the S&P 500 is basically within 1% of its high, and we go from that below 50 to above 95% in that risk-on, risk-off cycle, what we can see is some incredibly bullish numbers when we look out 6 months to a year later. All right, these were all the types of readings that we got multiple times through 2012 to 2014 as the market continued to head higher. We got one of those in 2016 and 2017, and then also right there in 2019 before, of course, we ran into the coronavirus, and we even saw a little bit of that earlier this year, or right at the end of 2020. So we have seen really, really good returns 6 months to a year later with this type of cycling. So strong markets continuing to get stronger off of solid technical patterns, and investors have positioned themselves for it, and historically that has boded well. Now we come in, we take a look at the U.S. dollar, still fighting in between that 93 and 95 zone. Off of the FOMC, you can see that we pulled a little bit back down. The next day we popped a little bit back up. We're still just kind of trading in this zone where we have been in since September, with no clear move up or down. We know we've got big time resistance sitting right above price, but on the short term here, over the last 6 months, we've continued to put in higher lows. So we have an uptrend over a 6-month time frame, we have a downtrend over a 2-year time frame, and we know when we pull this back out and look at it over a 10-year time frame, we're just trapped right in the middle of the range that we've been in for the last 10 years. So the US dollar, not a whole lot exciting happening with this chart, but there are some important levels that are right here, which is why we continue to watch it. We jump in next and we take a look at oil. Oil pulled all the way up to like 87, fell all the way back to 80, and I'm going to zoom in on an hourly chart so you can guys see the importance of the level that we bounced off of, right? So right in here off of this 80 zone, we have multiple areas of price action that we've seen here over the last couple of weeks with a rejection. Then when we broke out, we then used it as support, and then you can see we once again used it as support and made a strong bounce here this morning back up over 82. So what we're really paying attention to is right around that 80 price point. If oil falls underneath it, then you can see the next level on this chart really is about that 75 zone. Still a very, very strong looking chart. When we back the picture up, we know we've got that resistance up at that 95 zone, and so we're continuing to pay very close attention. We've talked a lot about nat gas. Let me pull this back up and look at it on a monthly chart. We barely closed the month over that line. After last week's video, we had a big pullback once again. We are just fighting right at that 550 level. And so we're going to continue to pay very close attention to nat gas at this zone, right? And it's still above that box, but that's not the follow through that you would really like to see out of the space. Now let's take a look in at copper. You can see when we back this out onto a monthly chart, we have, once we pushed up and made those highs, we have done nothing this entire year, right? We are right back to that spike from January, right? After the January-February push, we have gone nowhere in copper. So that's just that long basing pattern that we're seeing here. Chart's holding up. I mean, this is good, right? When you talk about price action, there's two ways that we can digest a move. We can either pull back or we can trade sideways for a long period of time and kind of digest the large move that we've had. Moving sideways through time is a lot more bullish than having large pullbacks. And so something like copper has basically held on to the majority of its gains from last year, is trading sideways for a while. So we do look for that, for a potential continuation over that 480 zone. We will continue to monitor this very closely. We'll jump in now. We'll take a look at the precious metals. Gold fighting at that 1800 level. Not a whole much more to say about this. We continue to stay inside this downward trend here over the last year, but when we look at this in the context on a monthly chart, this again is just a very good looking potential setup for a continuation. We just haven't seen it yet, so we're going to continue to pay very, very close attention to it. But this space really has not done much of anything for quite some time, and if life comes back into these charts, we'll certainly be on top of it. Silver, looking for that move back up over 25, trap between 22 and 25 here. We take a look in at Platinum's holding up over 1,000, which is good, but really needs to get back up over that 1150 zone. And when we take a look in at Palladium is just trapped in between that 1800 and that 2200 zone there. So we are looking for the next leg out of this. Last thing I'll leave you with today here is that Nasdaq McClellan Summation Index. As you can see, we are back above that zero line, which is a very positive sign. We held that 300 to 400 kind of support area here in terms of breadth and have pushed back up. The next area we're going to be watching is what happens when we get up into this 300 zone. You can see that multiple times this year that's led to a downturn in breadth. That was also from last October. That was also important from February, and it was also an area of importance from May and the previous years. So you can see that 300 line, really, really important. Breadth readings are really solid. Markets are up at those all-time highs. Things look really, really good as we head into the end of the year. I've said it before, technically these things look very, very solid. The only concern that we really have is what's going on in terms of the shipping container crisis and goods moving through the economy as we head through the holiday season. That is something that could put a damper on holiday sales, and so we're going to watch that pretty closely. But when it comes to the charts, things look really good here, folks. As always, if you guys want to reach out to me, you can reach me at mtedeschi at perspectivewealthplanning.com or hit me up at 814-580-9881. I would be more than happy to talk anything about stocks with you guys. As always, take care, and I will see you next week.